Alright, yes guys, welcome to the trade recap of the trade I took today on the 23rd of June. It was a break-even trade, however the thought process going into the AM session was completely correct. Repeat this in the near future. Obviously, we are profitable, closing each week in the green, getting consistent payouts. Top Step just paid me $50,000 last Thursday. I forgot to even tell you guys, I receive so many payouts on a monthly basis that sometimes I just forget to post it. I'll pop it up on the screen in this video so you guys can check that out as well. Without further ado, let's jump into this trade recap. Starting on the daily time frame, going into the AM session, you guys can see we're trading the September 2025 contract on NQ futures, and we're trading out of a daily bearish gap on the previous days. We're not trading out of a bullish gap, therefore our bias is bearish on that daily time frame. We don't consider highs, lows, mitigation, order blocks, breaker blocks when it comes to determining bias. Bias is purely off imbalances only. Now we look at the daily, specifically on the daily. Now we specifically look at the 4 hour, and then the hourly, then the 15 and the 5, and then we put them all together and see what the overall bias is. So now by looking at the 4 hour time frame, on this specific time frame, we wasn't even trading out of any imbalance. We're not trading out of a bullish imbalance or a bearish imbalance, therefore our bias is neutral on the 4 hour time frame. However, on the other hand, the hourly time frame was in a different scenario. We was trading out of a hourly bearish gap. If I just pull this back to 11 AM from when we actually took the trade, we're trading out of an hourly bearish gap. We're not in a bullish gap, therefore we have a bearish bias. Target, previous low, and also unfilled hourly bullish gap if we was to create this and close this next candle. By looking at the 15-minute time frame, price actually hadn't already traded into that 15-minute fair value gap, and we was actually in just the 15-minute bearish gap. Obviously on TradingView replay it's jumped forward on us, but we wasn't actually inside of this gap. Therefore the 15-minute also had a bearish bias. So the 15's bearish, the hourly's bearish, the 4 hours neutral, and the daily's bearish. Overall bias there, you guys can see, is bearish. Now we're looking for a sweep of liquidity paired with our bearish bias, which in this case was London highs 4 AM 23rd of June, which was from today, London. After sweeping London highs, going into the second day of macro, as you guys can see here, we had a shift in market structure on both NQ and ES, a draw for discount, so we're looking to target discount of the move higher. We have a bearish breaker paired with the fair value gap. We also have a bearish SMT on ES, which you can see here. NQ took out the high, ES didn't. Bearish SMT, shift in market structure, entry, fair value gap, breaker. Inside of macro, we're looking to take a short at 10:50 AM inside of the second day of macro, which is 10:45 to 11:15. Stop placement at this candle body's high for around a 20 handle stop, and then looking for the first 1 minute low that's going to give me at least a 2-to-1 risk to reward. In this case, the first 1 minute low to give a 2-to-1 is this low. Therefore, I have to aim for a 4.15 risk to reward, which I don't usually like doing. In other cases, today you actually could have targeted, if you look on the 15-minute time frame, this unfilled 15-minute bullish gap as your TP. And if you was to target that for your TP, this got tapped into on ES but not on NQ, therefore you would have closed out for TP and you would have got around 50 to 60 handles on this trade. However, I like to target an actual 1 minute low, which is there for price, and run my TP just above. My TP today never actually got triggered, which some days was break even, some days we take a loss, and some days we make a profit. As the days go by, I never reflect my trading day from the dollar amount that I made. I reflect the day, ensuring that I had the correct thought process on each trade that I did take that day. Thought process, patience, and discipline are the three aspects to a profitable trader trading any concepts. ICT, or you could be trading other concepts. Without having patience for the model to come across, you're not going to be profitable. You'll be taking loads of low probability / gambling trades. Without discipline, you won't be able to actually execute the model that you say you're going to execute. And without knowledge, you won't even know what the model is itself. That's why putting it all together will actually mold you into the best trader that you can possibly be. After taking out the first short-term low, which is relatively close to break-even, I didn't go to break-even because we're still very close to break-even. That means the stop trail would be too aggressive. I trail my stops either way to that previous short-term high, therefore only risking around 5.75 handles instead of 20, so I massively minimized my risk after taking first short-term low. Once we took the second more significant short-term low, which is relative equal lows on the 1 minute time frame, that's when I neared my stops all the way to break even. As we started to accelerate closer to 50% of the total trade and trading into that unfilled 15-minute bullish for value gap to the left, I then trailed my stops to the most recent short-term high, which put my trade into a 2-handle profit. I closed out today probably plus $1,000 or $2,000. For me, that is literally break even. I secured around 2 handles, which equivalates across my funded futures, take profit trader, Top Step, FTMO, and a live account to literally a break-even trade because it's only 2 handles. Last week I closed down a profit, the week before I closed down a profit, the week before I closed down a profit. I'm currently on a 13-week winning streak. I do take losses in between the week sometimes, but as the week progresses, each week I seem to close out in a profit. Not every single week throughout the course of this whole year that I'm likely to not have a losing week. Of course, a losing week is definitely bound to happen. A losing day is definitely bound to happen. Possibly even a losing month is bound to happen. As long as you stay consistent with the same model and same approach each day, only applying for a 2-to-1 risk to reward, there's no reason why you should ever mess up or ever have an inconsistency for longer than a week or a month's time. As long as you build up drawdown on your account, and you have the correct amount of drawdown and risk management applied to your account, one, for a losing streak, you'll never be affected or even brush a sweat, and therefore your accounts would then never be phased by even the slightest losing streak at all. And then after this point, you guys can see that price returned back towards break even. That was the result for Monday as of this week. If you guys enjoyed this trade recap, make sure to drop a like on this video, subscribe to the channel, and actually comment on this video what you guys want to see inside of future videos. Any topics that you're maybe not that comfortable on, make sure to drop a comment and I will take notes, ensuring that I make a future video on that topic. Until next time, have a great rest of your day and I'll speak shortly.